Welcome to BigONE Weekly News Update. I'm Mia. As the first quarter of 2026 comes to a close, global financial markets remain under significant strain. Escalating geopolitical tensions, tightening liquidity conditions, and institutional repositioning have contributed to a broad risk-off environment, weighing on both traditional and digital assets. Crypto markets extend declines. Cryptocurrency markets continued to trend lower over the past week. Bitcoin declined approximately 7% to around $66,000, approaching what could become only its second instance of 6 consecutive monthly losses. Ethereum fell 5.7% to roughly $1,980, while Solana decreased by 6.6% to near $81. This weakness reflects broader market conditions. U.S. equities have now fallen for 5 consecutive weeks, with major indices reaching multi-month lows. U.S. Treasury yields rose to 4.49%, an 8-month high, while crude oil prices surged to levels last seen during the 2022 Russia-Ukraine conflict. Gold, traditionally viewed as a safe haven asset, recorded one of its worst monthly performances in a century. Market sentiment has further deteriorated amid declining confidence in geopolitical leadership, particularly following unsuccessful developments in U.S.-Iran negotiations. ETF flows show signs of stabilization. Despite net outflows toward the end of the week, Bitcoin exchange-traded funds recorded overall net inflows for March. Since October, approximately $3 billion of prior outflows has been recovered, although cumulative net outflows still exceeds $6 billion. Notably, the average cost basis of ETF investors remains above current market prices, indicating that a significant portion of investors is currently holding positions at a loss, which may contribute to continued market sensitivity. Anticipated launch of Morgan Stanley Bitcoin ETF. Market participants are closely monitoring the expected launch of a spot Bitcoin ETF by Morgan Stanley, which would represent the first such product issued directly by a major U.S. bank. With a management fee of 14 basis points, lower than competing offerings, the product is positioned to be highly competitive. More importantly, Morgan Stanley's network of approximately 16,000 financial advisors overseeing an estimated $6 trillion in client assets could serve as a significant distribution channel, potentially unlocking substantial new inflows into the crypto market. Evolving business models in digital asset markets. Innovation within the crypto sector continues despite prevailing market weakness. Prediction market platform Polymarket has introduced a dynamic fee structure designed to optimize revenue while discouraging market manipulation. The model applies higher fees when outcome probabilities are uncertain and reduces them as certainty increases. Early estimates suggest this approach could generate annualized revenues between $210 million and $340 million, reflecting a transition toward more sustainable business operations. Institutional rebalancing and risk management. Institutional behavior is also evolving. Mara Holdings sold approximately 15,000 BTC for $1.1 billion and used the proceeds to repurchase outstanding convertible debt at a discount, reducing its liabilities and improving financial flexibility. This development underscores a broader shift among crypto-related firms toward balance sheet optimization and risk management, particularly in response to recent market volatility. Expansion into traditional financial applications. A notable development in mainstream adoption is the planned introduction of mortgage products backed by crypto assets. Through collaboration between Better Home and Finance and Coinbase, and with support from Fannie Mae, borrowers may soon be able to use digital assets such as Bitcoin or USDC as collateral without liquidating their holdings. Given Fannie Mae's central role in the U.S. housing market, this initiative could significantly accelerate the integration of crypto assets into traditional financial systems. Outlook, liquidity, and volatility remain key drivers. Looking ahead, markets face additional pressure from quarter-end rebalancing and profit-taking activities. Furthermore, the upcoming U.S. tax deadline on April 15th is expected to tighten liquidity conditions as capital is withdrawn for tax payments. In combination with ongoing geopolitical uncertainty, these factors suggest that elevated volatility is likely to persist in the near term. Conclusion. Although short-term conditions remain challenging, the long-term trajectory of the crypto market continues to be shaped by increasing institutional participation, product innovation, and expanding real-world use cases. These structural developments are expected to play a critical role in the evolution of the digital asset ecosystem. Join BigONE today and take advantage of the growing cryptocurrency market.